Hello everyone. Thank you so much for participating in All Things Annuities webinar today on the subject of multi-year guarantee annuities versus bank CDs. I wanted to take a few minutes first to take care of some housekeeping items. I am your host today. My name is Colin MacDonald. I'm the president of All Things Annuity. I am an independent licensed agent and I help clients throughout the United States. When I sell an annuity to one of my clients, I get paid a commission directly from the insurance company that is used. That is ultimately how I am compensated. I have over 20 years of experience in the financial service industry, and really my primary focus is helping folks that have a portion of money in their nest egg or their 401k where they want to put an ironclad guarantee on that. They also understand the importance of having a plan to make sure that you never run out of money during retirement, regardless of how long you live. Now what we'd like to do is give you the agenda and our goals that we're going to accomplish today on today's webinar. First of all, we're going to discuss the basics of annuities. Next, we're going to really dive into the differences between a multi-year guarantee annuity and a bank CD. Most folks that we help are familiar with the bank CD. Maybe they've owned one in the past, but they're not too familiar with an annuity. And today we're really going to discuss the pros and cons of both of them so you can make a wise decision if it's something you want to take a closer look at. Okay, here's the deal. We have a tremendous amount of information to get through in a very compressed amount of time here today. I'm very optimistic this information is going to be useful for you. More than likely, some of you are going to have some questions pertaining to the products. You might have some additional curiosity that you'd like to maybe discover. Here's the deal. I just ask for this favor, just wait on the questions until the end and regarding the products or anything of the material that we go through. And at the end, we'll be happy to answer all your questions candidly. Any additional follow-up that you like, we'll be happy to accommodate that for you. Okay, let's get into the meat of it here. What I'd like to discuss with you now is the basics of the annuities. This is a good starting point for most folks, just to really get a clear understanding of exactly what an annuity is. And ultimately, what an annuity is a contract between a policy owner, you, and an insurance company. And with that contract, what you're ultimately getting is, first of all, an ironclad guarantee on your money. Any amount of money you put into that program, you can rest assured knowing that you're never going to have less than that due to any kind of market volatility. The other option that you typically receive is the option to receive an income stream each and every month for the rest of your life. So an annuity is ultimately a contract between you and that insurance company that you end up electing to use. Now let me just speak to you a little bit about the importance of that insurance company and really why it's important for you to do your due diligence about the overall safety and soundness of that insurance company. What most folks find to be helpful is looking at the financial ratings, looking at kind of their history of how have they operated, not just with policy owners today or the last year, but do they have a good track record going back 10, 15 years? Because really at the end of all of this, what you're having here is a contract with that insurance company, and it's vitally important that you do your due diligence as far as really discovering their financial ratings and just overall reputation in the industry. Now there's a few key terms that are helpful for all of you to be familiar with, because this will be something you'll see throughout kind of your investigation or research into annuities. First of all, owner and annuitant. Now this is ultimately you. If you purchase the annuity, you're going to be the owner, and in most cases the annuitant. Now the owner, you can actually have joint owners. Some of my clients have a charitable organization be part of the owner, or you have a trust, or you have spouses can be joint owners in certain situations. The annuitant, just keep in mind, is the one that's going to receive all of the benefits of the annuity, the tax deferred status, the income option. They really have the control of the annuity. And finally is the death benefit. Most folks ask me, Colin, what ultimately happens when I die? Does the insurance company keep whatever's remaining? No, that's not the case. The death benefit is ultimately whatever's given to your spouse or your children or whoever your named beneficiaries are. So beneficiaries are going to be the ones that are going to receive the death benefit of the annuity. And it's important to note that these programs, anything that's remaining after you die, 100% of it is going to stay with your family. Okay, the topic of today's webinar is multi-year guarantee annuities, and let's go through this. So ultimately, a multi-year guarantee annuity is simply choosing which amount of time that you would like in the annuity. So it can range from 3 years, 5 years, 7 years, all the way up to 10 years. And typically, the higher amount of time that you elect, the higher interest rate the insurance company can give you. But typically it works like this. Let's say you pick a 5-year multi-year guarantee annuity. The insurance company is going to give you a set interest rate every single year on that money that you put into the annuity. It's never going to be less than that. It's never going to be more than that, but it's going to be a guaranteed rate. At the end of 5 years then, you really have full control. Okay, so the first option is to re-up, if you will, at whatever the declared interest rate is at that time. The insurance company will declare that at the end of that 5-year period. So you could go another 5 years then, or you have the option to lump sum out of it. Take all of your money back and do whatever you wish with it. Maybe there's a higher rate that you found or a different type of program or investment that you feel is better suited for you. You're going to have full liquidity. There's no penalty on your money at the end of that 5-year period. Now, these programs are really most similar to a bank CD. Many clients I work with own a CD or they have in the past, and one of the primary reasons they've really felt comfortable with the bank CD is A, it's simple, B, it's shorter term, and C, it's just easy to access the funds at the end of it. And this is very similar, but there's some real good advantages with the multi-year guarantee annuity versus the CD that we'll get into in a moment. But next, what I'd like to do is show you the highest 3- and 5-year rates available in the country and the financial ratings that go with that. And we'll kind of delve into that in a second here. So let's take a look at the highest 3-year rates. Now, what you have here is a list of some of the highest multi-year guarantee annuity rates for 3 years. And so ultimately, just like I had shared with you, you get 3 years at set interest rate every single year. At the end of that period of time, you got the option to take all of your money back, or you could re-up for another 3 years at whatever that declared rate is. Now, some of you might have noticed that the higher interest rate programs are more or less being sold by a little less of a rated insurance company. You see B++, A-, A+, what have you. Now, this is very important to note for you, the consumer, when you're looking into a multi-year guarantee annuity. Typically speaking, the insurance companies that have less than an A rated are going to be a little bit more enticing to you by giving you a higher interest rate. Now, you have to make that decision ultimately on your own if you feel comfortable with a company that has less than a superior rating. The ones that have a higher rating are going to come in a little less on the interest rate, and really that just gives you a little bit more peace of mind that you have a more superior rated insurance company. So typically speaking, a less of a rated insurance company is going to give a little bit more on the interest rate. A higher rated insurance company is going to give a little bit less. But here's the 3-year rates that will give you the highest maximum guaranteed interest rate on the fixed annuities currently right now. Okay, next what you're looking at is the highest 5-year multi-year guarantee annuities in the industry. And similar to the 3 years, it's the same concept. You get your interest rate every single year on your money you put into the annuity. You're not going to get anything higher than that, nothing less than that. For 5 straight years, you're going to be able to lock in this interest rate. A typical question I get though is, can I add money to these programs? Typically the answer is no. It's a single premium amount that's going into the multi-year guarantee annuity. But as you see here, it's the same story. Some of the lesser rated insurance companies are going to give a tad bit more on the interest rate to entice those folks that are maybe typically looking for a more superior rated company. So here's the 5-year multi-year guarantee annuity rates available right now. Now as you see here, we've gone over the 3 and 5 years, but keep in mind too, these programs can go all the way up to a 10-year fixed rate of return, but just for explanation purposes, we just chose the 3 and 5 years. We'll be happy to get you those other interest rates if we receive that inquiry form for you. Now the next slide that I want to show you, and this is important, this is showing you the highest current CD rates in the country. And I really encourage folks that if you own a CD, if you have one maybe coming due, to really do your due diligence, do your research, and compare. Compare the difference between the CD rates and the multi-year guarantee annuities, because more than likely you're going to find that the annuity has a higher rate. Now, some folks will always tell me, well, Colin, I like the peace of mind knowing that my CD is backed by the FDIC. And that is very true, and ultimately the banks are going to be very safe and secure, and you can always have that peace of mind knowing that your money is secure. But I always kind of remind folks too, you know, the I in FDIC stands for insured. And you can go back to the Great Depression when the banks failed. It was the insurance companies that bailed them out. And my point to you is, you know, when you're looking at a multi-year guarantee annuity with a highly rated insurance company, it is extremely safe and a very conservative type of program. And if that is the case, you might as well get a little bit more interest rate on your money. And that's why folks that I help are moving those CDs over from their CD over into a multi-year guarantee annuity. But here's the current rates of those CDs. In a moment here, we're going to do kind of a comparison of the advantages of the annuity versus the CD on a tax-deferred basis. Now, where the light bulb often goes off with the clients I help is when I explain to them the real distinct advantage of owning a multi-year guarantee annuity versus a bank CD, and that's tax-deferred status that you have on the annuity. Now, what exactly does tax-deferred mean? Well, let me give you an example. Let's hypothetically say you take $100,000 and purchase this multi-year guarantee annuity. Let's also assume you take another $100,000 and purchase a bank CD. And let's just say for explanation purposes, they're both earning 3% interest rate. Now at the end of the first year on the multi-year guarantee annuity, you now have $103,000 and probably change because it's compounded interest rate. And that interest is continuing to be tax deferred. You don't owe any taxes on that, and that is ultimately what you're building upon for the next year. So it continues to compound versus the bank CD. You're getting that 3%, but that interest that you've earned is now taxable. So you're now getting actually less due to the fact that you have to give that portion to the government. And what most folks really discover, it's better to have your money be working for you with the multi-year guarantee annuity versus taking those taxes that you own on that interest and giving it to the government. So the fundamental advantage of the multi-year guarantee annuity versus that CD is that tax deferred status that you receive. Now it doesn't mean that you don't never pay tax. Ultimately with the annuity, once you take any kind of withdrawal or any kind of income, or if death were to occur, of course Uncle Sam is going to get his piece. But while your money is growing, the interest continues to grow tax deferred. A typical question I get from clients when they're thinking of buying the annuity or they've owned the annuity now is, what happens if I need to get access to that money? Let's say that you had purchased a 5-year multi-year guarantee annuity, and something comes up, you need a new roof or whatever the case may be. Is there any kind of liquidity within these multi-year guarantee annuities? And that's an excellent question. And here's the simple answer: yes, but these can vary as far as product to product. Some programs offer you a higher interest rate without the ability to take any kind of withdrawal for the set amount of time you chose. Other programs allow you to take up to 10% in a free withdrawal after the first year, so they give you that access during the time your money is growing. This is where it's really important though, and I want to stress this, that just due to time constraint, we can't go through every particular program. Just drop me a note, let me give you the opportunity to speak with you on a more in-depth level, and I'll be happy to show you precisely which programs allow more liquidity versus others, which I think will be helpful for you. What many of the clients that we help have found very useful about allthingsannuity.com is that we consistently try to keep the highest multi-year rate guarantee annuity information right there on the site. So anytime that you're curious, maybe you don't have a CD coming due for 6 months, you'll be able to log on and in real time be able to look at the highest rates available to you. And speaking about All Things Annuity, if you haven't really delved into it, I encourage you to do so. We really put together an A to Z kind of tool for folks that are kind of in that exploratory space of the research. We provide a tremendous amount of information on there. There's all sorts of videos and articles. Very helpful tool to really get a better understanding of these so you can really determine if these are something that are going to be a fit for your overall retirement planning. So I encourage you, if you haven't looked, take a look at allthingsannuity.com. Hey, in closing though, let me just say thank you very much for the opportunity to be a part of this with you. And I hope that this information has been useful for you. Hopefully I've been transparent of how these programs work and really the differences between the multi-year guarantee annuities and the bank CDs. And I really encourage you to just take a moment to fill out the inquiry form. You're going to be able to get the recording, as I said. You're going to get the annuity buyer's guide. And of course, if you'd like to set up a time to have a conversation with me in the future, I'll be happy to do that as well. And for all those that have some additional time available, I'm going to kind of stick around for some overtime, if you will, and I'll be happy to answer your questions right there on that chat box there. I'll do my very best to answer the questions. Sometimes it might take a little bit more in-depth time to answer it, but I'll try my best to answer them candidly and give you additional information. So thank you all very much for the opportunity today. I appreciate it, and I'll stick around here to answer your questions.